Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Had interesting headlines starting out the week yesterday with the Dow reaching a record high of up 800 points. It's now heading for its first close above 49,000, and with the implications of investors shrugging at the Venezuela situation, and Ford also closing with their highest sales since 2019. So lots of interesting topics to get into for this session. Happy to welcome everyone back to the first TradeFinder live session of 2026, and very excited to interact with you all. So let's go ahead and kick off. Rob, you out there?
I am Zach. Happy New Year, everyone. Welcome to TradeFinder Live. And hopefully everyone enjoyed a wonderful holiday season and you got to get into the spirit of spending time with family, friends, loved ones, etc. Lots to talk about as far as what occurred in the markets. You can see that we are, as Zach mentioned, continuing the rally today. I talked to our subscribers during the Evo show yesterday about how the Santa Claus Rally is broadly regarded as the last 5 trading days of December and the first 2 in January, which was odd because the first trading day of January was on a Friday, and obviously makes sense that a lot of traders would just extend their holiday break through that Friday. So we really get an idea of what's going on during the first full trading week of January. That's been my viewpoint. And in addition to that, you look at what happens during that Santa Claus rally period, and oftentimes the first full week of January retraces that. Again, just something that I've noticed over the years. Oftentimes you have a rally through that time frame, which is why it's called the Santa Claus Rally. I posted commentary that said, "Where's Santa?" Because during this period we went down. And so now that we're in the first full trading week, you can see back-to-back up days as we are recovering that downward move, and we're right back to where we were before that period started. So kind of following along with things that I've noticed over the years, the market is at this point in time. We obviously want to see where volumes are and note that the downward move that occurred during that lower volume usually drift higher Santa Claus rally period, we had lower volume on the selling, which is unusual. Normally on selling days, you get big volume. We didn't have so much. And then we had pretty good volume here to start the first full trading week of January. So I think all those things are interesting and play into where we may go moving forward. I had noted, in fact, I'll switch to it right now because it was one of our case study considerations here in the past on TradeFinder. It's still an active one. I had thought that with all the performance chasing, and that has to be taken into the mix as well because it was huge, the number of investment managers that had underperformed the benchmark, the S&P, and needed to try to chase performance in order to get their numbers above the S&P so they get their bonus checks. That's how that world works. Big money in the bonus checks. And so I thought these stocks would be interesting, that they would start taking a look at stocks that had been really beaten up, like TTD, that was back in August a $90 stock. It's now a $40 stock, and that's on the back of 2 up days. So it is starting to move. It had based, but you can see during that time frame, this is not what the performance chasers were looking at. So I thought they'd be looking at deeply oversold stocks and try to gain outperformance on stocks that have been beaten up rather than going after the high beta stuff that had had big runs throughout the year. By a lot of people's viewpoints are overvalued still at this point. They chose a different route. They decided to short those high beta stocks. And that's why we had a little bit of the downward move in my opinion. So anyway, that's my opining on what's occurred while we are away on the holiday break. And so let's get back to where things could go now. Well, it's pretty clear You can see the resistance line here. We did briefly take that out towards the end of December, but we didn't close there. We closed right at the high of the wave 3, but since we traded above it, the algorithm labeled the 5, and it is purple, so we are in the wave 5, and we'll see how far that can go. First things first, though, we have to break above 690, and with supportive volume, in other words, we're not having big, massive volume spikes. If we were getting that, then I would say we don't have the momentum to break this resistance. But when you stay with good, steady volume, then that's the kind of environment that could break resistance and move higher. And the wave 5 has up as high as around 800 in the midpoint. The low is 760 or so. So some more potential upside there. Hopefully everybody got a chance to see my outlook for 2026, where I went into a lot of detail on things to watch, both from the bullish and bearish side. When we get to oil, we'll talk about Venezuela that Zach mentioned in the intro. But that's where we are on the S&P. All eyes on 690. Can we break above 690? The rhetoric, I believe, is going to be all about the bond market. And you're going to start to hear, because the economic data that was released yesterday wasn't very good. A lot of ISM reports that came out, all manufacturing, et cetera, they're all in contraction. They're all under 50 for the 10th month in a row. So the economy is still just wobbling along. And then we also had the ADP jobs report that came out. That's private sector report on jobs, not the government's big non-farm payrolls number, but it was weak as well. So the Fed has some room to cut. They've kind of hinted that they were going to do the December cut and then wait for a while, become data dependent again, using their phrase. And if that's true, well, the data is there. There were some that say they don't think there'll be another rate cut till June. We're really all over the map on forecasting when the next rate cut's going to be. Some still hoping for a January cut. Not sure that's going to happen, but I'm not sure we're going to wait all the way till March either, unless something dramatically changes in the market. So looking at TLT on the bond market, we completed perfectly this zigzag on TLT, 50% B wave correction, 100% extension, and we've just been pegged right there. This shows you how important these fib levels are, and the Elliott Wave patterns, like a zigzag, work amazingly well. We also have the head and shoulders pattern here. You measure from the neckline to the top of the head, then you go underneath the neckline, and the same amount of price movement that was on the upside to the top of the head is what you look for the downside once the neckline is broken. So we haven't quite satisfied the head and shoulders scenario yet. A little bit more to the downside would bring us closer to this 161.8% C wave extension, as well as the support level that's in that same area. But for now, bonds hanging in there, and as long as they're stable, that gives the equities market room to advance if it wants to. This move down here in prices, and again, as a reminder, TLT is prices on the 20-year. Prices and yields move inversely. So if you see a downward move in prices, that means yields and rates are moving up. Now, that could be a good thing if it was starting to steepen out the yield curve a bit. That would be an indication that the economy is starting to strengthen. Even the economy will strengthen before it shows up in the numbers. But when you look at the 10-year on TNX, and this is rates on TNX, so TNX is rates on the 10-year, TLT is prices on the 20-year. Rates are elevated on the shorter end, the 10-year as well. So we want to see a little bit lower movement down on the 10-year in rates. We break above this 420 level here, and it could get pretty wild as far as what the bond market is saying. Right now, that wave 4 is holding at a 45% correction, and I would like to see rates come down on the shorter end, stay firmer on the longer end. Again, that gives us an idea of economic strength, and we all want the economy to get better, regardless of which way you trade. Looking at the dollar is staying cooperative, I'll say. hanging in, extended out yesterday, the Goldilocks channel here, as I've been referring to it for quite some time. Even with these triangles, the breakouts still managed to stay within that range between roughly 98 and 100. And again, as long as we stay in this area, that is constructive for the equity markets to go higher as well. So at least for right now, the dollar and the bond market are cooperating as the bond market has stabilized from that period where rates went up. They're just hovering at those levels. But if we get breakouts in rates, again, we have to take a whole nother look at things and see where things may go. Zach mentioned the Dow. So here's the DIA. You can see the new all-time high yesterday. We're trying to make that a close today. Again, as Zach mentioned, we'll see how things trade into the close if we can hang on to this. We're already at 134% extension here on the DIA. And you can see back when the wave 5 was formed, the tap box here, we're at the upper end of that tap box. If we do continue to power higher on the Dow, I wouldn't be surprised to see this 5 relabeled to a 3. Maybe it doesn't, but if it doesn't, then this Dow rally is getting tired because 134% is a pretty good extension. Could it go higher? Yeah, it could go up to 161.8. It could stop at 138.2. There's other fib levels on where it can go, but with it being in a wave 5, I like to go look at where's the DMX? How much strength is there in this wave 5? Because if you know Elliott Wave rules, you know that the wave 5, although can be longer than the wave 3, is not as strong as the wave 3. All the strength comes in the wave 3. And you can see that there is a little tick up here on the ADX. We do have good separation between the positive and negative indicators. So the buyers or the bulls are in control right now. But I would want to see that ADX move up, and I'd want to see it take out these two highs to get an indication that there's really legs to this move here. You can see we had a higher high on the ADX, which led you to believe, boy, we're off and running. Right at that point in time, we were in between the two directional indicators. Again, the positive was going up, and it looked like maybe the market was going to just really explode. And then we calmed down through the quote Santa Claus Rally, and I already went through what occurred there and what money managers did. And so can we turn back up? So I'm not saying that the rally's over, just need a little more indication that this has significant legs on the Dow. If we move over to the Qs, in this big triangle, gosh, we were talking about this yesterday. I spent a great deal of time trying to find a security or an ETF where we could put a strangle on the Qs. And you either have to go too far out of the money, which you would have to on the Qs, or some of the other lower priced ETFs that mimic the NASDAQ 100's performance aren't optionable. Obviously, you can't put a strangle on something that doesn't have options. So still searching for that, but it may be a case because this is such a well-formed triangle. And as I mentioned yesterday, because there's a wave 4 labeled here, don't get caught thinking we're breaking higher. The market's going to break higher because there's a 5-wave pattern to the upside that this triangle is in. It may break higher, but you don't get caught thinking that due to the fact that we have a wave 4. When you have a triangle, you forget the LA wave pattern and you respect that any triangle can break either direction. AI data to show that. So maybe the move is just we'll let it break out and then trade the direction of the move because it's going to be a significant move from 590 up to 630, call it. So that's 40 points on the QQQ. That's a big move. And again, it could be up or down. We'll just have to let it play out. Maybe we get another run higher. We'll see. And then move into the IWM, which has found a home around 250. We did make a new high in December on the IWM, which was quite interesting. Then we went into the downdraft from the Santa Claus Rally period. We're trying to catch up here, a little bit behind the Dow and even maybe the S&P a little bit, but healthy that we're holding this 250 level, I think, on the IWM. As you know, it is the most rate sensitive. I've talked about that a lot in the past of all the markets. So kind of tends to follow either what's going on with rates in the bond market or in a time of risk on in the market because there's really high beta stuff in the IWM. There's companies that aren't profitable in the IWM. So when traders are in this market, they have a high tolerance for risk at that point, hence the risk on terminology. And so that's an indication of how investment managers and traders are viewing the market at any given time. It's a good way of looking at it, the IWM. Whether you want to trade it or not, I think you take a glance at the bond market, you take a glance at IWM. You don't have to be an expert in either one of them if you focus your trading mostly on the NASDAQ or S&P, but these are just good things to have in the back of your mind from an indicator standpoint of where things could go from here. Now let's go look at, once again, what's hot, which is gold. Took a little period of relief here. We had a nice rally coming from this correction in October. So we had run up, got a little bit vertical there, and you know my rule, what goes vertically up oftentimes come vertically back down. So we did that. We went on another run. And the same thing, started nicely in a 45-degree angle, then got vertical. There's the kiss of death, doji at the top. And so we came right back down, held 400 though, which was a key on GLD. And we've been moving back to the upside since. You can see where the wave 5 is. There's quite a ways things could still go here on GLD. And I think maybe at least for the near future, gold outperforms silver a bit. We'll look at silver next. But again, you can see that they're just decent bars here, which is supportive of something continuing higher. See what happened over here when we had this vertical move, and then you started to get bigger green days, significant volume there, and that pushed it up vertically. And so then the buyers were tired and the sellers jumped in and pushed things back down. So after that, things calmed down. Again, a build in the volume that comes in. That's what you want for a sustainable move. This isn't what you want when you're going vertically like that, because that's telling you everyone that wants to buy is buying right now. And then you get to the point, you know, the old Joe Kennedy story before the stock market crash was getting the shoe shine. The shoe shine guy said, hey, Mr. Kennedy, everybody I know is trading stocks. Do you have any recommendations? What stock should I buy? And Mr. Kennedy went back to his office and thought for a moment and said, the shoe shine guy is asking me what stocks to buy. Who's left to buy? In other words, everybody is buying stocks. He sold his portfolio, famous story, right before the crash. So anyway, just a little tidbit there on what I look at as far as volume. We have all these fancy indicators along with AI, et cetera, and still volume matters in my opinion. And anyway, I'll leave it at that. Otherwise, I'll get off on a tangent and spend too much time on it. So here's silver, which is having a good day. One of the things that I noted yesterday that's kind of wild is if you look at these bars, look at the volatility in silver right now. So we had this run up. Most of the bars are smaller. And then you go gap up, gap down, gap up, gap down, back and forth like a yo-yo. And big volatility on the gaps and after the gaps, the intraday trading following the gap open or gap down, gap up or gap down. So oftentimes the expression is volatility marks market tops or market bottoms. Hard to say that silver could be bottoming out, but I'm a little nervous about all this volatility right here. I think GLD is a little more stable, but for today at least, they're back in the silver market as well. And the wave 3 is green, so it's still active. We could go higher from here. You can see the AI trade there. It only gave it a 32% chance of hitting this target, but it did. You know, it's amazing when you get stronger signals. I'll show you some of that towards the end when we're picking our case study consideration for today, our first one of 2026. And Zach will show you a little bit of the platform. So let's move into the whole world of energy. We'll start with USO. Zach had mentioned that the market in general was shrugging off what happened in Venezuela over the weekend, but it seemed to be a solid mission. Everything seemed to go pretty well. There's all kinds of chatter. I didn't realize this, that there was more oil in the ground in Venezuela than in the Middle East, Saudi Arabia. So the massive oil potential there, and that could put a whole lot more oil on the market, which you would have thought would have moved the market for at least USO and the oil markets down. It didn't, because looking at it, their infrastructure apparently is so bad that's pretty much going to have to all be rebuilt. Tons of money invested to get it to producing to its capacity, fulfill the promise of how much oil there is, but also um, read that the oil there is thicker, and so I think a logical place to look might be in refiners. Sounds like they could get a benefit from that, but again, all that's way down the road. All this infrastructure has to be built. It's not going to happen overnight, and so the oil market looked at it that way apparently and said, "Yeah, we're not worried about it." Even though you would have thought that could have, at least the thought of more oil coming on the market could have pushed the price down. So far, just hanging around there in the 70 area, which, you know, is where it pegged for so long. So we had this downward move. We had a reflex back to the point of the triangle. Down day today, we'll see if there's follow through. There is still an AI target down below 65. A lot of people still bearish on the oil market. We'll see how it all works out. But yeah, those are my thoughts on what happened there. And I don't see how any of that is an effect on the equity markets. As Zach said, they're just shrugging that off. It's really immaterial for the majority of the markets, save energy. But then, you know, if we start having things going on in Greenland and some other areas that are being talked about, you know, maybe that starts to affect the equities market a little bit. But again, all speculation, and we have to wait and see what actually happens. So for now, the market is just moving forward, steady as she goes, and not worrying about what's happening geopolitically wise. Looking at UNG, it is rather warm this week in the mountains. We're going to be in the 60s for the high for several days in a row, which is quite unusual for this time of the year here. So this little warm spell has done nothing to help put a bid under natural gas. Towards the end of December, it looked like, all right, maybe we got something going here. Maybe we're going to go back again. We came down here, tried to break below 12, no follow through, headed back up. Basically just tested the 50-day moving average. On that day, we opened on the high and closed near the low. That's never a good thing for a rally to continue. And we did turn and head back down. I'm a little surprised that we broke 12 here on UNG, but we did. And now the question comes in, how low could natural gas go? And you can see as I condense the chart, how long it's been since UNG was this low. And, you know, all this support here in the 1250 range, all through there, back into 2024 now, and continuing to go back. So this could be a Katie bar the door type event. Zach, we might have one. There's just no real support from the recent past of any areas in here for natural gas. So kind of in free fall, you're in the phrase catching a proverbial falling knife right here, breaking out of this channel. We are a little bit oversold today with the 10-day moving average, so maybe that gives the selling a break in natural gas. But now you just watch and see where it could go from here. But you wouldn't want to come in short right now because of this separation from the 10-day moving average. Maybe if we bounce up, test 12 again, and can't break it, that could be some sort of a opportunity to short. To go long natural gas, you at least have to get back above 1250, and then you've got the 50-day moving average lurking not too far from there. So natural gas has some work to do and has been a really confounding market for the past year. As you know, if you've been watching week in and week out, very difficult to trade the natural gas markets, especially with all the other news that comes out with the data centers, how much they're going to use, and then they're getting pushed out, and then there may not be as many. You know, all the news headlines have just created a craziness in natural gas. Now, as we move to crypto space, Bitcoin had a good start to the year. Nice day yesterday, giving some of that back in today's trade, but still constructive, still above the 10-day moving average. We did test the 50-day in the last two calendar rollovers. I know that Bitcoin trades 24/7, but there is a calendar rollover for end-of-day software programs such as this, even though this one does update periodically throughout the day. It's not just end of day. You can see that turning back down from a labeled wave 4 is a little bit worrisome in the crypto space. I have been reading, and Zach, you can add in any thoughts if you have any. If not, I know you're multitasking back there, but from what I've been reading, there's an expectation that this could be a really big year for the crypto space. Nice start, but can we get follow through here is going to be key over the next couple of days. So here's Ethereum, ETHW, one of the ETFs for Ethereum. Also kind of playing around with that 50-day moving average, also above the 10-day moving average. And there's some headwinds for Ethereum as well. We're running into resistance at the 50-day moving average. We break above that. Then we have another area of resistance at 25. If we can break above that, there's another point. So we have this corridor here between 25 and 2750 that Ethereum is going to need to get through. If it can break above 2750, now we might be off and running. So some work to do, probably some back and forth over the next maybe even weeks in the crypto space, trying to see if they can mount a strong enough rally to push out some of the shorts that are in the market. There was a little bit of covering done yesterday, but obviously not so much today. All right, so that gets us pretty much through the markets that we like to look at. Show you the VIX real quick. Not really much to talk about there. Q Led Zeppelin song remains the same, just this 15 area. Just when it looked like we were going to break below it and maybe start to head down towards 12 and a half, it kind of looked at it and said, nope, right back up and trading right at that 15 level. This big triangle here maybe is telling us that might be in for lower volatility even on up days, and then expectation would be some sort of more volatility coming in a little bit later on, maybe further into the spring. Before that happens, get out of winter, start to look at spring. Maybe that brings some volatility in. Could have to do with if the Fed cuts, if they don't cut, all that kind of stuff. It's going to play into it. So I think it's going to be an exciting year because we're going to have lots of opportunities to trade, I think, both up and down. It's not going to be the same market in 2025, in my opinion, where everything's going up and the whole market's being lifted by 7 to 10 stocks. I think it's going to be a lot different this year. I think there's going to be opportunities all over the place. So excited about the year ahead. With that, Zach, go go ahead and answer some questions before we get to the case study consideration for today.
Yeah, sounds great, Rob. Let's get right into it. Got a question here to start off from Will. Let's look at SoFi, broke out of the triangle and got instantly smacked back down.
Yeah, in general, a lot of the financials have been doing well. Um, we had a couple alerts that we took off yesterday in the financial realm with nice gains. But I agree with you. We had this. I'll take the zigzag off because it got to 161.8. So it hit 100 back here. And if you've been watching for a while, you know, in these zigzags, oftentimes, if it isn't a wave three, happens way more often in a wave three than a five. You have a 50% B wave correction, you expect the 100% extension, and then sometimes we back down and then make a run up to the next fib level, so an extended C wave. And that's exactly where SoFi went, hit the 161.8% extension, and then kind of reverse back down from there. So we have support down here in the 25 area. So as SoFi is trading, taking a look at that area today on this downward move, looking at volume, there's some pretty good volume. I don't know what the news might be today on why it broke out on kind of the volume you want. Solid volume yesterday, but it's coming back down, and likely that's going to be a bigger volume bar at the end of the trading day. So reversed on stronger volume, kind of not following suit with what's been going on with some of the other financial stocks in the market. So as far as where it goes, it's right back in this channel. So I think we're back looking where we were before. The wave four is still there. We had that triangle, as you mentioned, right here with the lower highs, and then came down to support there in that 25 to 26 range. And maybe, because remember, triangles break out one of three ways. They break out and run, they break out, test the breakout, and then run, or the initial move is a false breakout, and then the big move is to the downside. So any of those second two possibilities, either of those second two possibilities, I should say, still exist here. But if you want to be long this stock, obviously whipsawing on you today, but as long as it stays above 25, I think you can stay long here, especially with what's going on in the rest of the financial realm. HSBC is one of the ones that we closed out yesterday. You can see this breakout movement here to the upside, and then also USB. Lots of financials in the results for these AI trades. And so just kind of the whole financial sector moving higher, that could give you some positive thoughts, I guess, on SoFi. But the support level from a technical standpoint is 25. So we'll keep an eye on that.
Very well. Next up, I got a couple symbols for you from Lisa. First one is going to be SKYT.
SKYT. Well, that's the definition of a vertical move there. And I would urge caution if you're long this, might consider taking some profits or at least tightening up stops, because last time it went vertically up, just based on what I talk about a lot, when it goes vertically up, oftentimes comes vertically back down. And this is even more of a vertical move than this one. So some backing and filling is definitely warranted here. And perhaps it doesn't come vertically back down. The better case scenario would be a sideways type consolidation, combination of up days and down days, backing and filling. And then as long as it holds above 22 and a half, it would be better from a technical standpoint if it held this wave three high in that area. But even if it came down and filled this little gap here and stayed above 2250, then I think you can stay long this if you want to. But wow, that would be difficult to not take those gains. And then doesn't mean that you have to be done with it. Watch it, let it back and fill, especially if you're in options. There's a definite volatility rush into the call options if you were long that. And I like to take that. I view that as free money when they just add volatility into the options on top of the delta and the gains from the price movement. Um, I like that. Let it back and fill. They'll take the volatility back out, let it calm itself down, and then maybe you can step back in. We'll just have to watch and see how it plays out, but maybe we can look at that one again next week and see how it's handled this. But those are my thoughts there.
Very well. Next symbol is going to be ONDS.
O M or N?
N is in nano.
O N D is in David S.
That's it.
Okay. Not familiar with this one. Similar looking chart to the Sky Technology thing we just looked at, and pretty much the same read here. A little bit vertical here, a little bit separated from the 10-day moving average, not quite as dramatic as the last chart, but similar thought process here. A little bit of backing and filling would be warranted here as well with such a strong vertical move. The clean break above 10 is bullish. There's some solid volume there, which means likely some institutions did step in when it got above 10. Remember the rule that only investment companies can own stocks below $10 if their investment objective is registered as aggressive growth. You get above $10, now that brings in any investment companies that have growth as their investment objective. And there's a lot more of those funds, et cetera, and investment companies that you get more volume when you break above 10. So that breakout move is supportive from the volume. We'll see where the volume ends today on a little bit of a quiet day. But the key here is holding this area at the wave 3 high. But even if it drifted lower than that, as long as it held above 11, if you have a longer term view here, I think you could stay into it. But with this separation, maybe a couple more sideways days are warranted, and how much pullback does it get would be interesting. So, yeah, not quite as extreme as the last chart, but same kind of viewpoint here that it's a little bit overbought right now.
Thanks, Rob. This next question is going to the SPX in regards to the new high and why the wave count didn't relabel.
Which one are we talking about?
The SPX.
SPX. And the question was regarding why it didn't relabel.
Yeah, based on the new high.
Well, we took out the wave 3 high and it labeled it a 5. So we'll see if if that 5 changes to a 3. If we go back to the SPY, they're labeled basically the same with the wave 5 on the new highs, and it could just be that we're in a wave 5 rather than move over or relabeling back to a wave 3. I guess that's the question on why it didn't relabel. But wave 5s can extend for a while. They're just not as strong as the wave 3, but they can be rather long. It hit that 23.6% fib level, backed off a little bit, but I've given background already on what occurred towards the end of the year in the markets, and I think we're just recovering that at this point in time. But the last comment I make on the relabeling is this 3 would move over, or this 5 would relabel to a 3 if the algorithm, based on all the math that's in the algorithm, senses that there's strength to the move. That will determine whether or not a 5 relabels to a 3. How strong is the wave 5 move? And if it continues to be weaker than the wave three, then it'll stay a five. That's just general stuff there. Um, but the algorithm is complex, and all those things have to line up for how the labeling concerns. Hope that answered the question. I'm not sure if I got the question right.
I think you did. Next up, we got a couple symbols for you. First one's going to be LAR.
LAR.
Yes, sir.
There's been a pretty good move in all these stocks. All commodities really are moving well. This is a clean break, no doubt about that. This is kind of what I like to look at when you have all this consolidation. You can see we had the wave three high and we traded up in that area. It was vertical here, right in this area right there, got vertical, came back, consolidated, a little bit of a drop, tested the 50-day moving average, back up. Really good consolidation here. This typically leads to upward moves. We did have an ascending triangle, but again, don't get caught thinking just because it's an ascending triangle that it's going to break higher. It did break higher, but not because it was an ascending triangle. It did its thing. It consolidated underneath resistance, gathered itself, had momentum and energy, and blasted through it. But now we have the same problem. Now we're really separated from where the 10-day moving average is. These commodities and stuff can really have outsized moves when they want to, but this is just a little too far from the 10-day moving average to chase for me. But I would certainly stay in this space. I think this space has more room to run. I don't think it's done. It seems too early in this rally that's occurred. Um, Another one, which I think is interesting in this kind of space, a little broader FCX. You can see the movement there. This one's on the AI scan results, as you can see, with a pretty good score there. These moves make it difficult to find entries when you get these big gap up moves, but maybe this needs a little bit of a break as well. But it's in a wave three. It's getting a little vertical. It's getting separation from the 10-day moving average. So I think the space needs a little calming and consolidation, but I don't think it's done by any way, shape, or form. I think that space goes higher. Just maybe let it cool off for a couple days. We'll see what happens.
Thanks, Rob. Next one's going to be LAC.
So obviously interested in lithium. So you had Argentina and now the Americas. This one maybe a little earlier in the breakout where we had all of this consolidation through here. You need to see a clean close above all this congestion right here, and it's trying. So I'd want to see one, where it closes today, and two, does it get some follow through? That might, because that's obviously a chart that has more upside room than the previous chart did, and maybe does some catch up. You can see this is what I was talking about before. When you get these big vertical moves and then you go into something like the $10 price level, that's an easy place for shorts to step in, knowing that if it doesn't break above 10, then there isn't going to be more volume to come in and support it, and you're likely to come back down, which is exactly what happened here. Now, maybe after it consolidated that vertically up, vertically back down, consolidate it. Now, maybe it has a better base to try to make a run up. And the potential here, we're hanging on by the hair of our chinny chin chin here on the wave four, right at the 78.6% fib level, to mount a wave five run. But that might be a better chart to keep an eye on if you want to be in that space rather than one that's gone so vertical. But let's see where it closes today and how it's trading tomorrow on whether or not there's follow through there.
This next question's on the AI functionality. I was going to type the response, but I figured it might be worthwhile for you to add some context for anyone else that might be wondering. And the question is, when does the AI change its percentage moves?
Once it comes out with a signal, change the percentages. Now, once those are set, they stay there. There are times when a particular stock might fall under the AI data points of more than one search. Just give you a preview here. Today's AI bullish search, and if you have the software is free, but if you haven't subscribed to the AI signals, I don't think there's a better time than right now. Look at this list for today. We'll talk about that when we do our case study consideration. It's going to be one of these. But look how many have scores above 75, which is kind of where we look at. That's when we become really interested. Even the scores above 70, I think, are interesting. And you can see Key, Zion, you see all kinds of banking stocks that are in here. Ally right off the top. So it shows you the financial sector has been doing well. But look at all these potential trades. There's a ton of them. You can keep scrolling down. You can way down the list before you get one that's below 75. And oh, by the way, there's gold at 75. The company GOLD, not the metal. But anyway, yeah. So once these scores are determined, they don't change. They don't move with what happens with the underlying stock. They give you a target zone and a fail zone. In this case, the stock was expected to go sideways, even though it only had a 9% score. It was expecting to go sideways, and it kind of did. It broke down towards the lower boundary here, which you would expect, and then went sideways a bit. So you could have taken advantage of that on something sideways, which we wouldn't do because the score is too low. But you could have tried to strangle back here when the signal came out. If you were diligent, you might have been able to take off the calls and hold the puts and really have a grand slam trade there. But anyway, that's a lot of talking about one chart, so I'll stop so we can get to some more.
No worries. I think that was some solid added quality there, or clarity rather, quality clarity. Next up is Will saying Amazon's having a good day. Wants to take a look.
Yeah, Will, I think we might be getting ready to do something here with Amazon. Um, Big update today coming out of this consolidation. Another one that had a triangle and too high priced to put a strangle on. But watching the breakout move, and normally the rules are, and I'm sure you know this, Will, we look for the follow through or confirmation day. Um, but boy, that is a solid breakout day, and we'll see where the volume ends. And kind of gave a little precursor yesterday on an up day with solid volume, and then we're backing it up today. But today's the breakout day. But Amazon, if it does show follow through here, could be off and running for a while. That triangle is from, just roughly call it 210 to 260 without getting too detailed. So about a 50-point move from the point. So that would get us up to about 280. So up in the area of the top part of this tap box and maybe a little higher. I think that's likely as we head through the weeks ahead with Amazon. But yeah, really strong move today. You don't want it to get too far. That's where it separates from the 10-day moving average, and it's easy for the shorts to push it right back down, a la SoFi. So got to see where it closes and then what happens tomorrow. But yeah, that looks like a very interesting place. And people that have been listening know that I'm a fan of Amazon over the longer term. Here we're talking more about trading, short to intermediate term. But I think having a long-term strategy on Amazon makes sense in anyone's portfolio.
Thanks, Rob. Next up is good old Palantir. A question from Maria. Oversold bounce or an actual move up based on the CCI?
Yeah, Palantir has been a challenging one because, no question they're doing a lot of things right. They're making a lot of money, but their valuation is in the stratosphere, and starting to run out of the retail trader money here in it. The retail sector loves this stock, as I'm sure everyone knows. So it got up to 200, got a little too vertical, came back down, came all the way back down to 150, which was a good area of support, obviously, in hindsight. And see, it tested that area that was support back from July and August, tested again in September and the beginning of October. So we tested it in November, moved up, couldn't take out the previous high. And so back down we come, but we're holding at a higher low here at 170, which is key. So if you're long the stock, I think you have to watch this low right here. If that gets taken out, then I think you need to get out. It would still be aggressive to be long now. The more conservative entry would be if it breaks back above 190, then maybe it's had time to consolidate the previous big move from the first half of last year. And some of these more vertical moves, again, don't hold because they're vertical. Every time something goes vertical, I hope you can hear my voice in the back of your mind, and at least makes you tighten your stops, if nothing else. But the 10, 30, and 50-day moving averages are all right here at 180. Seems like it wants to go up and test 190. From there, then I think we have to wait and see, does it have enough strength and momentum to break above 190? Maria mentioned the CCI, and that is constructive, coming off an extreme point low, heading back up. Getting above negative 100 is important. You can see that's where the shading ends. I love how the software shades in the CCI, one of my favorite indicators along with the DMI. And maybe that is an indication, Maria, that we at least try to test that 190 level. That would probably bring the CCI back up to around the neutral line, the zero line, and then we would have to take another look at it and see if the setup is starting to favor breaking 190 and moving higher from here. But yeah, again, it depends on how aggressive one wants to be on whether they trade that move to 190, suspected move to 190, or wait and see if it actually does break 190. So two different schools of thought there.
Thanks, Rob. Next question I have for you is, what does CVNA look like? Every other used car mega dealer is down large, but CVNA seems to keep maintaining its stock price.
Yeah, there was a report that came out that I think you mentioned it, Zach, in the entry as well, intro, or maybe I'm just remembering it from earlier, but I think you mentioned it that used car sales um, had a good number this morning. So maybe this is the start of the wave five, that wave four right at 50%, testing the 50-day moving average. It's got work to do, though. Gosh, I remember when this was like an $8 stock not that long ago. They were looking like they were going out of business. It's amazing how things can get turned around. But breaking above 450, I think, is going to be key here. Um, Pretty easy to see that from the chart. So even if you're very aggressively minded, 450 is so close. Maybe we just let it show us that it can do that. Holding the 10-day moving average on the low was important, and we might get what I'd like to see is a few sideways days, a la what happened back here when it broke above 450, where it tried to hold it and make the run up to at least 500 or into the middle of the tap box. And it couldn't do it, but it also fell victim to what happened at the end of the year from the quote Santa Claus Rally timeframe. Maybe it's catching itself and ready to go back up. So watch 450 on this. I think is the key.
Thanks, Rob. I'll give you one more question here, and then we'll head over to the case study consideration if that works for you.
Sure.
All right, SMH.
Well, that's a good one to look at because that's been where a lot of action has been in the semiconductor field, and you can see it's continuing today. Also, a bit of a triangle here. All these good triangles were on high-priced tickers. which made them difficult to put strangles on. But I think we're going to see a lot of this too. That's why I'm so excited about 2026 is I think we're going to have, it's not going to just be one-sided long anymore. And long, short, consolidation, going to be across the spectrum of the market. I think this year you're going to find opportunities in different sectors and different stocks within them. But nice breakout here from the triangle, 325 to 350 points from about 360. So it looks like maybe there's a little more upside to go here. The only negative is we are a little bit overbought from the 10-day moving average now. So confirm the breakout, but now we're a little bit overbought. Maybe a day or two of sideways stuff would be helpful for the SMH to see if it can continue the move up. It's in the tractor beam. 400 is pretty close there. Stocks with these big round numbers tend to just get drawn to them, hence the tractor beam analogy. But being overbought at this point in time, one or two sideways days would be warranted here. Let the 10-day moving average catch up, or even just a little bit of a pullback. You don't want to see it come all the way back down here, but a little of that sideways, choppy, back in and filling stuff would be good here. But be surprised if SMH doesn't hit that 400 level at some point in the not too distant future.
Alrighty, very well. If you want to head over to the case study consideration for this week,
All right,
to show
sounds good.
your analysis.
We're going to go back to the AI search again, just showing everybody how many came out of this. So the one that, I mean, there's lots of them here. You could go down the list, and there's all kinds of good and interesting stocks to look from. But the one I wanted to use as our case study consideration today is Rio. You can see it's got a pretty solid AI score here. We're a tiny bit overbought today, but not too much, and see if we can make that run up to that target around 89. I think that could happen in relatively short order. With a little bit of separation, maybe we get a little bit more of this kind of stuff for a few days. You can see we had a nice run up, and then it consolidated it beautifully sideways right above the 10-day moving average, let it catch up, and then it broke again. So maybe a little more sideways stuff before it heads up to its target. So we're looking long Rio. RIO symbol is going to be our case study consideration for today. And that will be an actual idea, Zach, because it's coming from the AI search.
Very well. All right, I will take the screen over here and that idea posted.
Did you take the screen? I don't think you got it yet.
Have it up. I just have to stop your share and should be good now.
There we go. Yep.
All right. So as Rob mentioned, this is going to be an official idea for this week. So heading up over to this right toolbar, we have the ideas icon. We will select new idea from this left toolbar. This one's going to be on Rio. And it's going to be on the NYSE with a target price of 89. Is that correct?
That's correct.
And what's the time frame we're looking for on that one?
3 months is fine.
3 months. So we'll go a quarter out, and we will come back as always and add some more details to make this look more with showing our supporting evidence rather, and make it look nice and pretty. But as you can see, I've published the idea, so now it's available for you to go in and interact. Just as a quick example, I'll select this idea here to give a visual of what I'm explaining. So with any of the ideas in this ever-growing platform, you have the capability to go up here to the right side and physically agree or disagree with the idea, as well as comment on the idea as well. We always ask to hear your ideas or your opinion, whether you agree or disagree. For any of those that have been around since 2025 or before, probably heard me say this quite a few times, but for anyone that might be new, joining us for the first time, I always think it's worthwhile going over that we always encourage your opinion and to share that, whether you agree or disagree. If everyone agreed or if everyone disagreed, there'd be no trading, there'd be no options, open interest, there would be no transactions available for people to take advantage of, as there has to be a person who agrees or disagrees, or a buyer or seller, if you will. So again, we always encourage you to share your opinion and the supporting evidence, or your hypothesis behind it. Just always being considerate of the community. And I think the Hub platform community has done a fantastic job at maintaining that etiquette and being able to share discourse in an intellectual and considerate manner. So I think that'll wrap up my soapbox for today's idea posting. But as you can see, going back over to the idea menu, as it loads, it's available for you to go in and interact with. And as I said, we'll be adding more details with the chart as soon as the session concludes. So I'll pass back over to you, Rob.
Yeah, second everything you said, Zach, and I can say that if you are new to the platform, the community is very respectful from what I've seen of opposing views. More people at it every day. I get notifications. It's great to see the growth of it, combining technical analysis, AI signals, and the social media aspect. I think makes the software just really, really cool. And it's a learning experience is the one thing that I would add is you post a thought, see what other people think, whether people agree with you or disagree with you, doesn't matter. But somebody may say something that might be something that you haven't thought of. That's the great thing about having multiple people looking at something. You know, we see what we want to see and what we believe, and maybe we don't catch something that somebody else does. And so it just makes us all better having the community aspect. So it's a wonderful feature. All right, with that, first TradeFinder of 2026 is done and complete. Again, Happy New Year, and I hope you're as excited about the year ahead as I am. I can't wait to see how things play out and take advantage of all these opportunities. Still blown away by the length of this Wave 3 bullish list. So we'll get back to the S&P, see what happens as we move into the close today, and whether or not the market can hang in there. We have moved higher while we've been on here. So can we break this 690 level is going to be the thing to watch for on the SPY. And once again, if we do today, you know the rule. You need a follow through day. So that's what we'll be watching in the coming days. I didn't take the screen back, did I?
Nope, but I
Well, you're showing it
up for you. Yeah.
Okay.
Doesn't look as detailed and as well put together as yours. This is just the TradeFinder default, but
yeah, a little bit of an ascending pennant going on there too. So yeah, lots of things to look at and see if the market can follow through. We'll know more about that tomorrow. So those of you that are subscribers in the insiders meeting on Thursday night, we'll have a little bit more information on where we close today and if there was follow through tomorrow. So with that, have a great rest of your trading day. Thanks for spending some of today